All right. So, guys, as already introduced, this is Taifoor Khan, a qualified chartered accountant, like associate member of ACCA Pakistan and associate member of ACCA as well. So, from this session, we are going to officially start our audit and assurance subject for June 2025 attempt, and it can be used if anyone is watching on YouTube for the next attempts as well. But make sure that you are keeping the updated, the relevant related updated syllabus in front of you. So when you are reviewing these syllabus, you can compare, cross check with the updated syllabus as well. So you can identify the changes and then plan accordingly. So in this lecture, we are going to discuss about the exam structure, right? If you people remember, yesterday I asked few questions in the WhatsApp group. The purpose was to understand where everyone is standing. So when I start my session, so I can plan accordingly and I can bring everyone from the zero to same level. So I saw there are few pupils who joined ACCA after taking some exemptions. There were some pupils who didn't study audit before. There were some pupils who have already studied audit, but they could not pass or whatever is the reason. So from today's session, I will be assuming that you all people are studying audit and assurance for the first time in your life. I will be discussing the exam structure first, right? So what will be the exam or paper structure when you will sit in the exam? What will you see that you have to attempt, for which you are going to start your preparation from today with me? So let's start with the. I will show you sample paper first. Then we will discuss a little bit syllabus. Okay. And then after that, I will be giving you the brief overview of the whole subject that we are going to discuss in this whole class, in this whole session, till mid of May or like the first half of the May. So audit and assurance in your exam is of 3 hours. It is of 100 marks. It is divided into two sections, section A and section B. Section A is basically objective based part. There you will be provided with 15 multiple choice questions. Okay. There will be 3 scenarios, 3 different case studies or 3 different scenarios. There will be first scenario will be for the question 1 to question 5. Okay. There will be second scenario that will be from the question 6 to question 10. There will be third scenario that will be from the question 11 to question 15. So you will be required to answer the multiple choice questions. Then there are 3 questions, question 16, question 17, and question 18. Question 16 will be your 30 marks big case study, scenario-based question. There will be multiple requirements that you will be addressing based on the information provided in the case study or the scenario-based question. Then question number 17 will be a 20 marks question. That will be a subjective question. There will be a case study, there will be multiple requirements, and you will have to write your answer in the word box or writing box over there. Then the question 18 basically. That is the last question. It is also a 20 marks question and is a scenario-based question. Now we will review the same question, that with question paper. This is of the September 2016 attempt. You will see some lines on it because before this session, I had the session, Urdu Hindi session. So I use that there as well. Okay. So it will be a 3 marks, hours and 15 minutes of exam. And you will be required to attempt all the questions. There is no option in it. The section A, they just discussed. The first scenario, it is for question 1 to 5. Okay, after scenario, you will see there are 5 multiple choice questions. So based on the information given in the data, you will read the question and you will answer your questions accordingly. Then the second scenario, if you see, that is from 6 to 10. Then there is 5 questions are here, like same trend with multiple choice options. And then there is third question, the third scenario from 11 to 15. So after these 15 questions, each multiple choice question is worth 2 marks. So 15 multiple choice questions means total 30 marks are in the part A or section A. So then there is section B. The first question is like you will see this kind of big case study or the situation or like the body of the question. Then there will be 4 to 5 small requirements, and those requirements will have separate marks given to each requirement, and total marks of question will be 30 marks. Then question 17, same, you will see a case study scenario, okay, and there will be 3-4 requirements, small requirements, and each requirement will have its own marks, and it will be 20 marks question, full question. Then question number 18, same scenario, multiple requirements, and each requirement will have its marks, and total marks of the question will be 20 marks, and it will be total will be 100, and you will have to get 50 marks to get your you get permanent credit and promoted to the AAA paper. Okay, so we will be discussing everything in detail. The syllabus is, let's go through the syllabus as well. Quick overview of the syllabus. And there are multiple chapters included in this syllabus. But no, the main thing is what resources to use for the preparation of this exam. I believe I have already shared the Kaplan book, latest book, along with practice kit in the WhatsApp group. I would suggest you to read that book only. Kaplan, just rely on the one book only. Read the theory from there. Do the practice question from anywhere you can do. But for reading purpose, just keep yourself limited to the one book study, so you don't get confused anywhere. Understood? Because here in the sessions, I will not be opening or using any book. I will write a topic. I will discuss everything related to that topic. And then I will ask you to read the specific content from the specific chapter of the Kaplan book. I will be teaching you much more than what is written in the book, right? But when you will read that book, the content element area, you will understand in a very better way. It will be easy for you to understand the stuff. Understood? Any questions so far? So we are good to go. Please show some participation by saying yes or no in the chat box if possible. All good? Show some participation. In the previous sessions, students were very active. They were asking questions and a lot of questions and all that stuff. I'm expecting from you people as well. All right. So now the subject, audit and assurance. There are 2 words, and the whole subject is like surrounding around these 2 words, this title. Audit is basically examination of the financial statements. What is the examination of the financial statements, and why is it required to examine or check or the verify or check the financial statements? Basically, if you remember, you studied in your business studies like business law or business management or business technology or any subjects related to the businesses. You studied 3 different types of business. The first one was sole tradership. So in case of sole tradership, the individual owner is taking care of the whole business. He is making all the decisions and is making all the investments. In case of partnership, there is a second type of business, partnership. In case of partnership, all the partners are actively involved in the business operations, in the business decision making, right? But in case of company is owned by the shareholders, but it is run and managed by the board of directors. It means owners are different and the people who are managing the company are different. So this is why there is a relationship of principal and agent. Now here, shareholders are principal. They have hired agent to run and manage their company, and they are paying agency fees like the director's remuneration. They are paying fee to the directors in the sense of bonuses, incentives, salary to the directors for managing and running the company of the shareholders. If I believe you have studied the term financial statements, right? In the business law, in the corporate law of any company, any country, it is clearly mentioned that the board of directors of a company are responsible or required to prepare the financial statements and submit to the shareholders. So board of directors are the persons who are managing the company, who are running the company, who are making all the day-to-day decisions, operational decisions, investment decisions. And then at the end of the year, they are the persons who are preparing financial statements and submitting to the shareholders. Now, if you are a shareholder, okay, and you hire me as a director to run and manage your company, see, the whole year I will be running your company. I will be taking all day-to-day decisions. I will be making all the investments. At the end of the year, I am the person who is preparing the my performance reports, like income statement. I mean, how I did in the whole year. Means like my performance reports, income statement, balance sheet, cash flow statement, and statement of equity. And I will prepare my own performance reports and I will present to you, right? So you being like normal and something doubts will rise in your mind, and you will think that because I am paying him fee, I am paying him the bonuses, incentives, there are chances that he might have manipulated the results of the company. He might have overstated, over recorded the revenue to show extra profits so we can make us happy and we can give him extra bonuses, right? Otherwise, the second possibility could be he might be using the company's cash for his own personal benefits. He might be using the company's assets for his own personal benefits. He might be showing some fraudulent sales or some fraudulent expenses and he might be getting cash out of it. Anything can come in your mind. So in that, it means when you are asking the same person to prepare the report on his own about his own performance, so there will always be some doubts by the person who is asking, who is the main owner, who is the principal. That is why in need of audit arose or arises, and then it means now there is a need to get these financial statements reviewed by an independent third person. The person who is not connected by any way to either to shareholders nor to the neither to the shareholders nor to the director of the company or the management of the company. It means shareholders has to hire a third party, independent party, who is the subject matter expert. What is subject matter expert? Means the person who knows how to prepare the financial statements in accordance with the IFRS, right? If he knows, then he will be able to examine the financial statements, means audit. So the what will happen? Because of this doubt, shareholders cannot trust the directors because they are the persons who can, there is a conflict of interest, because for the director their interest is different, for the shareholders their interest is different. Just because this conflict of interest, there is some risk. There's some risk of fraud, some risk of misappropriation of assets, some risk of overstatement of revenues or understatement of expenses and all that stuff. Understood? So that is why there is a need to hire an independent third party who can review the financial statements prepared by the board of directors and present those financial statements to the share. So when present that report, because then when he will, because if I am the auditor, I am an independent third person. If I have reviewed all the financial statements and I made sure that there is no mistake, right? I checked everything and I confirmed that there are no mistakes in the financial statements. Then I will issue a report to the shareholders of the company that okay, after your appointment, I have reviewed, I have examined the financial statements of the company, and I am giving you assurance that financial statements are prepared in accordance with the international financial reporting standards. So this is the reason why the need of audit came into the market, and companies started hiring the auditors to get their financial statements audited, which were prepared by the management, means board of directors. Now, in every country's company law, corporate laws, there is a requirement, there is a mandatory requirement to get the financial statements of all the companies audited. All right. So, and in the every country's corporate law, company law provides eligibility criteria for the persons who can be appointed as an auditor of the company. If you have any questions till now, you can ask. If you don't have any questions, please just say yes or no in the chat box so we can move forward. All right. So basically, financial statements are prepared in accordance with the accounting standard, IFRS. No, sir. Okay. When we study FR, when we study SBR, when we study FA, we study that subject from the perspective of the accounting. But here we will be discussing this whole subject from the perspective of the independent third person who will be hired by the shareholders to conduct the audit of the financial statements, right? Means the auditor, the third person independent practitioner who will come to the company and will audit the financial statements. So there are, this is why if see here, the independent person has to audit the financial statements. So it means the person who is auditing the financial statement must be subject matter expert. What is the subject matter here? The financial statements. If a person does not know how to prepare the financial statements, how can he audit those financial statements, right? So therefore, in every country's corporate laws, company laws, business laws, the eligibility criteria for the auditors is mentioned, is specified, right? The person who is willing to conduct the audits of the companies, he must make sure that he is meeting all those criteria. For example, if we talk about the UK, okay, in UK only ACCA qualified, ICAW qualified are the persons who can sign the audit report, who can conduct the audit. Because when we say auditor, it means the person who will sign the audit report. In Pakistan, only chartered accountants from the ICAP have the authority to sign the audit reports, and up to some extent, cost and management accountants also can sign the audit reports. So this eligibility criteria is set by the local regulatory authorities, local laws, which we can say Companies Act or the corporate laws or the business laws. So first of all, for example, I am a partner in PwC, okay, and a company ABC came to me and said, "Oh, Mr. Defour, we want you to hire you as an auditor to conduct the audit of our company." So definitely if you take it in a normal way, so you will definitely accept this assignment and you will go and conduct the audit. Why? Because they will be paying you a good fee. And I am sitting in the PwC, why? To provide the services and get the money. But when it comes to the audit, the auditor means the partner of the PwC, he has to check certain things. First thing that he has to check, that is legal eligibility check. He has to check that all the requirements mentioned in the local corporate laws are fully satisfied. It means he is not violating any single provision of the eligibility criteria. For example, if you see, I am continuously using the word independent third person. For a person to be an auditor, it is must that for him that he is independent to the company and to the shareholders. When we say must be independent to the company, it means he must not be connected to the any director, right? Any main office holder of the company. It could be CFO, senior finance manager, director finance, CEO. Understood? These all are the, if he has any close connection with that person, it means he will not be able to conduct the audit. Which means he will not be able to conduct the audit with independence. So his independence will be compromised. So he will not be legally eligible to be appointed as an auditor. If his appointment is illegal, then the rest, everything will be null and void. Understood? So the first thing that the auditor has to do, he has to check, he has to apply the legal eligibility check. If is he meeting all the criterias or not? Once this check is done, yeah, okay, he is meeting, that's fine. Now next thing is ethical requirements check. So what are the ethical requirements checks? And there is an international body that have issued the ethical standards that are for the accountants in practice and accountants in business. Accountants in business means the ACCAs, ICAW qualified, or other chartered accountants from the different bodies who are working in the industry, like manager finance, CFOs, director of finance, and all that stuff. Those ethical requirements are applicable on those people. What are those requirements? For example, integrity. They have to do everything in good faith and for the best interest of the company, right? Because company is paying them the money, paying them the service, all these kind of stuff. So they have to remain the professional. They have to make sure that they are keeping everything confidential. They are not sharing the personal information of the company and the data with anyone outside the company, right? These are the different ethical requirements that are applicable to the persons in the business. Now here we are because discussing the from the auditor's perspective, and when we say accountants in practice means the accountants, the chartered accountants or ACCAs who are doing or working in the audit firms, who are the partners of the audit firms, who are the managers of the audit firms, or who are the some wherever they are posted in the hierarchy. Those are, but the only thing is they are working in the audit firms or practice firms. So there are ethical requirements, they have to be met. Okay, if the firm, I check that okay, I am meeting all the ethical requirements, we will discuss these ethical requirements in detail in a separate chapter. We have a full chapter on it. Okay, so once the ethical requirements check is done, what is the next thing? Next thing is to auditor, I will have to make sure that there are certain preconditions that are existing. What are the preconditions? It means these are the conditions are provided by the auditing standards. What are the auditing standards? Auditing standards are the same as the accounting standards. Accounting standards guides accountants to provides the accountants the way or the rules or principles to record the transactions, to process the transactions and prepare the financial statements, right? Then the auditing standards guides auditors how to perform the audit of the financial statements, right? In this subject, we will be discussing whatever I will be discussing here in the lectures, I will be discussing from the perspective of the auditing standards. I will be, without mentioning the name of the auditing standards, I will be discussing the requirements of those auditing standards, because the name of the auditing standard is not required in the AA exam, the F8. Making sense? Any confusion so far? You can ask the question, please. Your participation is highly required to make it an interactive, because as of now, it is a monologue only. I am just speaking and discussing, no response from your side, no question from your side. I would really appreciate if you ask the questions If you have any confusion, you can stop me and you can ask me to repeat something or any or rediscuss in a different way. Anything? Good to go. So what are the preconditions? So before starting and before entering into a formal agreement, before signing a contract between between the company and the firm, the firm or the auditor or the partner has to make sure that there are certain conditions, preconditions that must be agreed and acknowledged by the management of the company. We will discuss these in detail in the relevant chapter. Okay. Once these conditions are discussed and agreed by the management, then I can move forward. What is the next step? We both, I will sign, we both will sign an audit engagement letter. We can simply write it engagement. We will write it engagement letter. What is engagement letter, right? Because this is a proper corporate transaction. Company is hiring me to provide them the services, right? Whenever you hire someone, whenever you enter into a business transaction with any other party, second party, you agree certain terms and conditions, right? To secure the rights and obligations of the both parties. Making sense? This is why in the audit assignments, in audit assurance engagements, the both parties signed an engagement letter. This engagement letter is issued by the firm, okay, and signed by the both parties. In this engagement letter, there are certain conditions that are must to be mentioned, right? And there are other multiple conditions that can be mentioned based on the need basis if the relevant factors, relevant areas or criteria are meeting. But there are 5 conditions that are must to be mentioned in the engagement letter. What are those conditions? We will discuss it when we will reach to the relevant chapter. As of now, I'm just giving you the brief overview of the whole audit, how it happens basically. Once the engagement letter is signed by the both parties, now they are into a illegal contract, right? Now it is binding on the both parties. Now the auditor has to perform the audit assignment, complete the whole audit procedures, whatever are the requirements, and then issue the audit report to the shareholders of the company. Understood? And by this agreement, by this engagement letter, management is also obliged, is liable to provide all the information to the auditors so they can perform the audit. What is the audit? They can examine the financial statements in a proper way so they can conclude their opinion. Because what is the purpose of this whole engagement? That the independent third party can provide his opinion. What opinion? Because the shareholders wants a third party to check the financial statements and tell them, are these financial statements prepared in accordance with the IFRS or not? Right? The objective, what is the objective? So basically, objective of this whole engagement is that the auditor has to obtain, means has to check the financial statements in a proper way to obtain sufficient and appropriate evidence so he can reach to a proper conclusion, to a proper opinion, so he can tell the shareholders that these financial statements are prepared in accordance with the IFRS or not. Understood? Making sense? Any question? If you have any questions, please ask. If everything is clear, just simply say no, sir, no questions. Currently, all is clear. Okay. So if anyone have any questions, please ask. The more you will ask, the more you will learn. Okay. So because you learn when you ask the questions. I believe there are no questions so far, so everything is clear. All good. Either I am a good teacher or you are very good students, huh? All right. So, yes, someone is asking a question. Mic is on. Jahadullah, yes, please. Your mic is on.
Thank you, sir. Just
Your voice is no. Your
thank you,
voice is
sir.
not
Just
clear.
for the.
Your voice is not clear.
Okay.
Can you write in? Can you write in the chat?
Currently, it's good.
Yeah, it's fine now.
Yeah. Yeah, definitely. I will write the question. Yeah.
Jahadullah, I cannot hear you properly. Can you write your question in the chat box? Your voice is not clear. There's too much distortion. Can you write your question in the chat box if you don't mind? I will address your question. I will repeat your question and then I will answer it. I think he is not. Okay. So I think he is writing the question. Then I will answer his question. So engagement letter is done. Now what is the next procedure? When you are properly into a contract, now both parties has to satisfy their obligations under the contract. What is the obligation of the auditor? Obligation of the auditor is to obtain, is to means the complete, do the audit, okay, collect all the relevant information and then prepare a conclusion. What is the conclusion? Means he has to give a final call. Are the financial statements prepared in accordance with the international financial reporting standards or not? Okay. So for this, how will he do? How will he reach to that conclusion? He will do. Can you hear me properly? Voice is clear? All voice is clear? Can you confirm, please? Hello? All right. Perfect. Because I think my internet was having some issues. Okay. So what auditor will do after the engagement? He will plan. Audit planning. In the audit planning, they will decide the team. They will allocate the members to the different areas of the financial statements. Okay, Mr. Gemini, you have to do the fixed assets. Mr. Hashmadullah, you have to do the revenue audit. Mr. Huzefa, you have to do the lease liabilities or the lease, verify the leases, etc. Means they allocate the resources accordingly, all that stuff. When they will start the audit, what will be the process, when they are expecting to conclude the audit, and when they are planning to issue the report. These are all the planning we will discuss in the detail. Once the planning is done, they also do the risk assessment along with the planning. What is risk assessment? See, why the auditor is being hired, why the auditor was hired. Auditor was hired to give his opinion because the shareholders had some doubts. They were thinking that there is a risk that the company's directors might have manipulated the information. They might have overstated the revenues. They might have understated the expenses and all that stuff. Therefore, auditor has to assess the same risk as well. Auditor will assess the risk of misstatement, of fraud, all that stuff. Okay. So after this risk assessment, if, for example, in audit, we do not check financial statements and everything in full details 100%. We check on sample basis. What are the sample basis? We will discuss in details. Means, for example, there are 100 revenue transactions. We do not check the everything of 100 transactions. We only select 10 to 15 transactions. We take the invoices of those sale invoices. We get the delivery notes. We get the purchase orders and all that stuff to cross verify based on the samples. Then we say, okay, out of 100 sale invoices, 15 are 100% correct. It means rest will also be 100% correct. Like this way, for example, we do audit based on the sampling. We do not do 100% checking or verification. So risk assessment plays a very important role in the sample size. So what is the basically the sample size? For example, I just gave the example of 100 transactions. Okay. First scenario, when the firm did risk assessment, they reached to the conclusion that risk is very high. It means there are chances that the misstatements are very high. There are multiple number of misstatements. It means in that case they will increase the testing level because risk is high, and they will check in more detail. They can check 40 invoices, mean they can do the 40% sampling. They can say, okay, there are 100 transactions. Okay, show us 40% transactions. Show us the invoices, show us the delivery notes, show us the purchase orders and subsequent receipts of payments, all that stuff. We will discuss all in detail. If risk management assess the risk and they reach to the conclusion that risk is very low, it means everything is going good. Auditor is relying on the management's integrity, management's controls, processes, policies, and systems. We will discuss how it impacts the risk assessment. Okay. So it means when the risk is very low, auditor will say, yeah, system is good, everything is fine. It's okay if we just check 10% invoices. Sample size will decrease. Means risk assessment plays a very critical and important role in determining the scope of the audit work that the auditor has to perform or the auditor will perform while doing the audit of the financial statements. Making sense? Once risk assessment is done, based on the assessed risk results, the auditor design the procedures, audit procedures, because what is the objective of the audit? The objective of the audit is auditor has to obtain sufficient and appropriate audit evidences to reach a conclusion, to reach an opinion that financial statements are prepared in accordance with the financial reporting standards. Understood? So audit evidence, to obtain sufficient and appropriate audit evidence, auditor has to perform audit procedures. Let me give you some examples of the audit procedures. First thing, so when you will be provided with the financial statements, okay, let me add 1%. Okay, when you will be provided with the financial statements, for example, let's start with the balance sheet. On the balance sheet, there are non-current assets, and when you will be provided with a balance sheet, you will see, okay, non-current assets, their property, plant, and equipment. The total value is, for example, 1 billion. Okay, so because on the balance sheet phase, you see only one figure, 1 billion. But balance sheet refers to the notes to the property, plant, and equipment, right? IX 16 requires us to give the breakup of the assets, classified assets, to the notes to the financial statements. We will go to that breakup, and in the note to the financial statements, how we present that note, we give the opening assets, opening property, plant, and equipment, additions during the year, deletions during the year, and the closing property, plant, and equipment. Okay, this was the cost side. Then for the accumulated depreciation, we present the same information, opening accumulated depreciation. Then we mention the charge for the year, depreciation expense for the year. Then we deduct the accumulated depreciation for the disposals, and then we present over there the any impairment losses for the year. Understood? So from there, being an auditor, what procedures will you perform to make sure that all the assets that are appearing in the notes to the financial statements actually exist? There is a possibility that they have recorded a fake purchase of assets, and they have do a fraud, a cash fraud. They did cash theft. There is a possibility, right? They have shown that they have purchased a van of $100,000, but in practically, physically, the van might not be there. They just did it for the documentation purposes, and they made the payment, the bogus payment, the fraudulent payment, right? So how can you verify? How will you verify that they have actually purchased that addition? Because when you go to the notes to the financial statements, there is an addition column, addition row in the PPE note. So how will you verify that addition? That to verify that addition, you will perform certain steps. Those steps, those actions are called basically your audit procedures. We call it substantive procedures as well. For example, how will you verify the vehicle? First of all, you will ask the management to provide you the purchase invoice, right? They will provide you with a purchase invoice. It means when you will see, okay, purchase invoice is in the name of the company and this is the amount is matching with the amount recorded in the books. The first thing is done. Now, as you know, in every country, when you buy a vehicle, there is a requirement to get that vehicle registered with the relevant country's excise department. So that it means the vehicle also has legal documentation as well. You will ask the management to provide you with the legal documents of that vehicle. That could be a bus, that could be a main car. If the legal ownership documents contains the company's name as the owner, it means the vehicle actually exists. They purchased it. Now the next thing is, does that vehicle exist in the company or is being used for the director's personal use? It means you have to physically check the existence of that vehicle. You will ask the management, okay, show me the vehicle that you have purchased. You will go to the relevant parking area. They will show you that vehicle. From that vehicle, you can check the chassis number, whatever you want to do. Making sense? Now you have verified the existence of the asset. You have now for the next thing, because in your financial statements, depreciation will also be coming for that asset, right? And IS 16 requires that you will start calculating depreciation from the date when assets come into the use of the business. So then you will ask the management when you receive this asset, and then you decide the tenure for which the depreciation should be recorded. Then you will ask the management how they estimated the useful life, how they estimated the residual value. Means after when all these procedures are basically your audit procedures. Why are you doing these? You are doing these to obtain sufficient and appropriate sufficient and appropriate audit evidences, so you can conclude or you can reach to an opinion that you will give in your audit report. Making sense? Any question from this discussion? If you have any questions, please ask. If you have no questions, just confirm no questions, sir. Question? No question? Please, your response is waited. Huh? No, sir. All right. We have around 10 participants. Please, all are requested to participate. Show your active participation. All right. Once you have performed all the audit procedures, then we comes to the final review. Then in this way, basically, we combined all of our findings. Whatever mistakes are identified, we write down all together. Okay, we review again. We discuss internally within the audit team again. Once internal discussion is done, then we discuss all these findings, all these misstatements with the management. We ask them, okay, as per our findings, as per our procedures, we have identified these discrepancies, these misstatements. We ask them to provide their justification for the accounting treatment that they did, right? Because they are the one who did it. So these are their accounts, their company financial statements. We have to ask them what is the logical or the what is the like how they did this accounting, what principle, what accounting standard they applied for this accounting purposes. They provide their justifications. If their justification is in accordance with the requirements of the international IFRS, then it is fine. If that is not in accordance with the IFRS, it means we will ask them to make the adjusting entries. Means correct their books, correct their financial statements. Okay. After this final review and discussions with them, When things are finalized, things are concluded, then we issue an audit report. In the audit report, we provide, because what is the whole objective of this whole audit assignment was that the auditor, the third independent person, can provide the audit opinion, because the shareholders has hired the independent person, the auditor, to give the audit report, right? That was the only purpose. The final product is the audit report. The whole this engagement was for the audit report only. But to reach the conclusion, the auditor has to obtain some information, some evidences, so he can back his opinion. Because if someone asks anytime in the future, why you said that these financial statements are not in accordance with IFRS, then at that point of time, auditor has to prove that, because he has all this information, he has obtained or identified all this information, but during doing the audit, right, that confirmed that this treatment is not in compliance with the IFRS. That is why I mentioned in my report that I am modifying the opinion, right? I am qualifying the opinion. What is qualification of opinion? What is modification of the opinion? All that stuff we will discuss later. I am just telling you the objective of the auditor. The overall objective of the auditor is to obtain sufficient and appropriate audit evidence while performing these steps to reach an opinion, okay, about the financial statements, whether the financial statements are giving true and fair view, or financial statements are presented in accordance with the IFRS or not. Any questions from this discussion? Any point, any confusion, any questions you can ask, please. We are good to go.
Sir, I have one question.
Yeah, please ask.
Yeah. Sir, in the markets, some of companies they need audit report as a shareholder requirement or donor requirement, but actually they do not have supporting evidence. I mean that face to fraud, but need to audit report, maybe internal or external report. But there are in the market some audit firms, for example, they give the audit report. My question is that who is responsible for that? Audit partner who signed the audit report, or engagement letter who signed?
See, and there the engagement letter signatory and the audit report signatory will always be the same person. The person who is signing the engagement letter will be the person who will sign the audit report. Understood? And the question
Yes,
that you
sir.
are asking, in this case, the person whoever is giving the report, right, on the financial
Yeah.
statements that does not have any supporting information or supporting documentation, he is doing it wrong. If
Yeah.
it comes into the knowledge of the government authorities, his practicing license, auditing license will get cancelled, and he will be penalized. His membership can also get terminated. Okay, so that's the main thing. He is doing wrong. He is not allowed to do
Oh,
it legally, ethically, anyway. Okay, if they are doing it, they are doing it. I
oh,
cannot say anything. But if we are discussing, so we have to discuss everything in the with the like supporting justifications of the auditing standards requirements and legal requirements. He is in the breach of the ethical standards. He is in the breach of the auditing standards and the legal corporate requirements as well.
okay, sir.
Understood?
Thank you.
Okay.
Yeah.
So this is not legally required. So if anyone is doing in your circle, ask them to not to do. Okay. So this was our today's discussion. We just had a brief we had a brief overview of our whole subject, the how it is going to happen, and what are we going to discuss. So you can have a better idea that what is the subject is about in this chapter. Now moving forward, we will be going chapter wise, and whatever I wrote here, each segment has its own chapters. On the audit evidence or being the substantive procedures, audit procedures, we will be discussing 3 to 4 chapters, right? On the audit report and all that stuff, we will be discussing 5 to like 2 to 3 chapters basically. So means we are good to go now, and that's it for today's session. If you have any questions from today's discussion, please feel free to ask, and I will answer your questions.